All right. Hey, everyone. Let me adjust my microphone. All right, cool. Hey, Mark here. How's it going? Um, all right, Mark P. Markets. You should know me by now. Welcome to my Monday Bitcoin analysis stream. Now, if you're new to the stream, welcome. Here's what I'm going to do. First, we're going to go over the economic calendar. There's not much on it, so it's going to be very brief. Then we're going to talk about this chart, okay, this Bitcoin situation and how to buy this pullback, all right, this pullback situation that we're looking at right now. And then we're going to talk about some trade scanner stuff. And Steen is ahead of me here, step ahead of me, but that's usually what he does. And we're going to talk about one of these trades because there's a few things I have to mention about that. All right, so with that being said, let's get started. Okay, so this is for educational purposes only. For investment advice, please consult a licensed investment advisor. Now, real quick, let me just pull up my TradingView, people. All right, so people on TradingView, you guys should see me. I am simulcasting on there. You can say hello. Also, if you'd like to share what city or what country you are from, that's always a fun fact. I'm streaming from northern New Jersey, also known as the greater New York City area. It's pretty cold here. Okay, so yeah, if you can't see me on TradingView, just make sure you refresh the browser. That usually solves the problem. All right, I guess I'm not going to have a large crowd here today. A couple of things I want to mention. First, if you're new to just trying to trade in general, and you're looking for an exchange or something like that, consider the links in the description. Okay, we have Bybit and the other one, Mexi. Those are affiliate links. Okay, so if you open an account and you fund the account and you place trades, Steen gets a small cut. All right, he gets a small fee or whatever, which goes a long way to helping him support the community. All this technology that we have available is because of his work. Okay, so and speaking of that, the reason why I have to mention that is because we have some updates coming for the bot. Now, if you look at the track record on the bot right now, it looks very mixed. A lot of red trades, right, over the recent few weeks. Why is that? And in December, like the first 2 weeks of December, a lot of green trades. What's going on there? Well, it has something to do with volume. So we're going to be updating some filters, over the next few weeks to try to really constrain a volume criteria to filter out some of these trades. Okay. A few other things we're looking to implement is the trailing stop, which is going to help out dramatically, because when you have a winner and that winner wants to run, you should get paid more, right? And the other big thing is we're working on, it's going to take a little while for this one, but it's coming soon, all right? And that is the bot will take trades on your behalf. Now, this is going to be for the coins first, all right? Not stocks or Forex. That'll be just for the coins because that's the easiest to implement. There are plenty of exchanges that we could do that with the APIs and all that stuff. But it'll be as easy as opening an account, putting money in the account, and giving permission to the bot, okay? And it will take the trades for you. That is huge, in my opinion, because now there's no excuse for missing a trade. The other thing is the robot is not going to take every trade. When I say robot, I'm referring to the trade scanner. It's not going to take every trade. What it's going to do is it's going to take a trade and it's going to stay in that trade and not take any other ones until that trade is closed, okay? So Steen ran a quick test on that, and the results were very promising. So that's how it's actually going to operate in reality. And you can actually see the open trades. You can actually see them right now if you're a member and you log into the dashboard. And it's very interesting to see them. And that's what Steen is referring to here with that trade. So just wanted to mention those things. Now, we have a free trial available. It boggles me in my mind, like people don't take advantage of this. It's a 1 week free trial. It's free, okay? FREE, it's free. And you don't get billed unless you don't cancel after a week. But you can actually get a sense of all the trades because you get access to all the trades and they're sent to you by email. So if there's something, tell me, feedback is great. If you can give me feedback and tell me, well, I don't know, your product sucks, please tell me, because that gives me the opportunity to improve it and make it a valuable tool in your toolkit. All right. Anyway, man, I don't see anyone here on TradingView. Is anyone listening to me over there? I don't think they like me over there anymore. All right. By the way, I wrote a TradingView article yesterday and the week before and the week before. Hopefully you've been checking those out. I pinpointed the top of this move. Okay. And I described it in those articles. Now, so in this stream also, I want to address how I was able to do that and how I came up with this idea. And I warned people. All right. I warned a lot of people about buying above 46K. I said it's extremely risky. Now, I'm always going to say that at highs. Okay. And here we go. So anyway, all right. So let me just say hello to a few of my regulars here. We got Stian. All right. Tillin. All right. Good to see you. Ken. All right. So yeah, if you guys have questions, put them in the chat now, and I'll try to get to some of them. I'm going to try to keep this stream brief today. Today's a holiday, by the way. All right. So the markets may be a little quieter than usual. So first things first, let's go over the economic calendar real quick. All right. There's only one thing worth mentioning this week, and that is, I believe it's on Wednesday, which is the 17th, and that is U.S. retail sales. So there's other items on the list, but they don't really matter. Okay. They're not market moving pieces of information. So I wouldn't worry. I would consider this week a quiet week because even U.S. retail sales is not, it's not a big market mover typically. All right. What we're most interested in is the CPI report and FOMC meetings. That's pretty much, and non-farm payrolls. Those are the key reports as far as economic reports go. Anything other than that is going to be like second tier, and it's not going to have the same effect. All right. So that's pretty much it on the economic calendar. Now let's move along. We got Christos from Brussels. All right. Good. Giovanni. Cool. Good to see you guys. All right. Dijon. Good to see you. Okay. So let's get into this chart now, shall we? I'm going to make the chart bigger. All right. So, by the way, if you like the stream, press the like button, press the subscribe button on the YouTube channel, press the boost over there on TradingView. I realize I need comments on these videos for the algorithm to pick them up. So we're gonna have to work on that. Anyway, all right. Let's make this chart bigger, and let's talk about this situation, shall we? So the title of today's stream is How to Trade the Pullback. So let's talk about this. Now, as you can see here, a lot of people, it seems a lot of people were caught off guard. So the first thing I want to mention is how I was able to pinpoint this top. Now, was I able to pinpoint it? Not exactly. But if you read my TradingView analysis from the week before, not yesterday, but the week before, in that analysis and in this stream, if you watch the stream, I talk about this area. I talk about how we have one more push. In fact, the title of the previous article was One More Push to 50K. What is this peak over here? 49K. Okay. So how was I able to know that? Or was I privy to some kind of inside information? No. 50K is a major level, right? First of all. Second of all, we were looking at 5 waves. I used to have a question mark on this 5th wave, but now I took the question mark away because the market has pretty much proven that that was the 5th wave. Okay. Knowing that we were in a 5th wave basically told me the party is over. I go over this so many times when I'm able to identify these 5th waves. The party is over. And meanwhile, all of your favorite frauds, all of your morons on TikTok, they're saying the party's just getting started. If you can count 5 waves, the party is most likely over. It means there's no more potential. So when you're faced with a situation like that, you're like, okay, let me see, what resistance levels are we at? Well, we have basically what? This area of like basically 46K. What's the bottom of this range here? I'd say, yeah, this is the bottom of this rectangle is 46K, right? And it goes all the way up to here. So that entire range, right, basically up to 50K, that range is a high probability reversal for a bearish move. I specifically wrote about that in the previous article, and I mentioned it in my previous stream. It's a high probability bearish reversal area. There you go. It played out. We got the bearish pin bar followed by the sell-off. Okay, so you should not be surprised if you follow me. You should not be surprised that this area experienced this type of move. So you had plenty of time in advance to adjust, get out of positions, take profits off the table, and not put on new longs in this area. This was a highly risky area. This also goes for if the bot was calling longs, right, in other coins, right, maybe whatever, some of these altcoins. You don't want to be aggressively taking longs when Bitcoin is in an area where it's likely to have a dramatic pullback. So what do? If you want to take them, you take them smaller, or you get out quick. If you have a profit, you just take something and get out because it's high risk. People don't have any way to assess this risk, and that's why they get caught. And then I get all kinds of questions. What do you know? What should we do now? Oh, I don't know what to tell you now. Now you're screwed if you're stuck in this from the top. I don't know what to tell you. Okay, don't take big risks. So now that brings me to where we are now. And there's a few things we need to talk about here. So as you can see, I drew this illustration on this was on my report from yesterday. Okay, this right here. So that's what I categorize as a complex reversal pattern. It's complex because it's got more than one bottom, right? That could be a failed low. That could be a double bottom. But basically, you could see now it's trying to come off the support. Now, 40K, the 40K support is a key area. If that level breaks, now again, there's no way to know if it's going to break. I can't forecast if it's going to break. The market either breaks or it doesn't break. Anyone that tells you they know the future is lying to you, okay? So all we can do is go by the information that the market confirms and then generate loose probabilities or a narrow range of scenarios to say, okay, if this happens, then this is likely to happen next. But we can only do that for a very short period of time, a couple of weeks, maybe a month. But anything more than that, you're just fooling yourself. Markets are highly efficient and mostly random. They're not all random. There are non-random things that occur in the markets, but it's not something that you can use to forecast where we're going to be in 6 months to a year. People are fools. All these, just think, just a few weeks ago, they were all saying, oh, you know, the ETF, it's going to be huge and blah, 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 and blah, blah, blah. And we go from 49K to 41K in 2 days, right? So much for being huge, right? You cannot listen to that internet nonsense. You cannot. If you're going to listen to it, you should be thinking the opposite. You should be using that as a red flag. Like if the whole world is optimistic, there's a problem. Okay, that means it's not going, most likely it's not going to go because, and there's the reason for that is the whole world is long and there's no one else left to go long. That's the idea behind that. So anyway, here we are, right? We're fooling around here and we have a green candle developed here. But again, this simple green candle, this is not a complex reversal on the daily time frame. Notice I'm sticking to the daily time frame. I'm not looking at a 4-hour chart here, right? There are other strategies to take advantage of what's happening right now. Not going to talk about that here. The trade scanner actually missed this because the trade scanner, I was looking at the trade scanner criteria because I'm like, oh, maybe it'll call Bitcoin long, but not with this type of move before it, okay? This is bearish momentum, and it's pretty significant. It took out a lot of minor levels in a very short period of time. That's bearish momentum, okay? So the question right now is, does that momentum stick or not? This is why I look for the complex reversal rather than a simple reversal, because if this momentum is still in play, then it's likely to continue, right? And if it continues, it will take out 40K. This is what you have to watch out for the following few days. At this moment, it's green, it looks good, but that doesn't mean the next candle won't be red, right? We don't know what the next candle will be. Now, the key is this. We want a few candles to go by, and we want another test of low, okay? And we want to see a failure of that break, meaning a pin bar, maybe another inside bar develops, but we want to see, we have to give it a little time. Here's an example back here of a more complex double bottom, something like this, okay? Except back here, we don't have like a major peak in place yet, right? This pullback wasn't like a major pullback compared to this one. So this one, sure, the complex double bottom is meaningful, but a single reversal is also still meaningful in that situation, okay? Same over here. You don't need complex reversals in those areas because you don't have a severe sell-off right before it. Here you do. So the idea here is we want to confirm that momentum, that bearish momentum, is not really in play. And in order to do that, you have to wait for a complex reversal, meaning a double bottom or a failed low, rather than a single reversal, like a single pin bar or a single inside bar. Now, it's very tricky because a lot of people are going to just jump in now and be like, oh, it's a pullback, right? That's what I want. And this pullback may only run up like a little bit, and then everyone stays in it, and then you get the next test, okay? And if that test happens to break 40K, a lot of people are going to be stuck. You don't want to be in that situation. So what do? If you want to take advantage of this little short-term movement that maybe works its way back up to like, 45K or something like that, maybe up into that area, so it's worth maybe 1,000, 1,500 points, whatever, then you're looking at day trades, right? You're not going to use the daily time frame, and you're not going to use this double bottom situation that I'm talking about to trade this pullback. You're going to use smaller time frames, and you're going to look for momentum continuation patterns, right? And you're going to be very aware of this area right here, which is a resistance area for smaller time frames to take profits, right? That's how you play that little move. Otherwise, if you're looking for the broader move and you're hoping for a new high, well, you're going to have to wait, or the more conservative thing to do is to wait for that complex reversal. And if you manage to take that trade, you're going to want to see a test of high, and you're going to want to see it pretty quickly. If you don't get that, okay, and that, again, what I'm describing now may take a month or a few weeks to play out. If you don't get that test of high, then you're looking at another potential test of low. We're basically in a consolidation, okay? Now, understand that a lot of people have gotten long in this area, and a lot of people are stuck. So I've pointed this out before, and I'm going to point it out again. We're going to go to the monthly chart, okay? So on the monthly chart, look what's happening here. I've pointed this out. We've talked about wave C. This move right here, right? This leg, this three-leg movement, right? A, this is the bottom of B, and then this is C. This area right here. If that's truly a corrective wave and it's peaked, then we're looking at a giant C wave over the next 6 months or 9 months or whatever. And who knows how low that can go, right? That could test possibly 15K. That's a little extreme. Maybe it only goes halfway. Okay, and maybe 30K is the level. Who knows? I don't even know if we're going to get that type of wave, but you have to be aware and you have to account for that risk. That's the key to that, okay? People, again, they want to know the future. There's no way to know the future. So you have to account for the possibility of something, right? And that this situation has been very concerning. Let's take a look at a weekly chart. What do we have on the weekly chart? Let's make this a little bit bigger. Okay, look on the weekly. What do we have? We have a bearish pin bar. Okay, that's how the previous week closed. That's not exactly what you want to see off of a major resistance level. That's bearish. So this is really not a place to be aggressively going long, especially as an investor. This is a highly risky area still. This current candle is green, right? We just started out the week, but if this thing closes bearish or the following week opens, right, and then takes out that low of this inside weekly bar or whatever, that will be a sell signal on the weekly time frame. And that's a large magnitude, which means you may see a more significant pullback. So that's the scenario that you really have to be aware of and be prepared for. Again, I don't know if we're going to see that, but you want to be prepared. So that means if you're an investor, you should be eyeing lower levels, first of all, to be taking your bites. You should not be taking large bites here because the risk is still high, okay? More attractive levels would be something like 35K, 30K, something like that in those areas, right? If you can get such a move, right? And that's where you start taking some small bites and see if it stabilizes, right? A lot of people are going to be too scared to take those small bites or take any bites at all if it starts breaking like that, because who knows where the bottom will be if it starts to do that. So look, you have to toss all news aside and all this other nonsense because the market's going to do what it does now. It's reacting to information and pricing in information now. I don't care what stories about Bitcoin halving and all this other nonsense. That's nothing but fluff. It's nothing but entertainment. It's not going to help you, okay? If it happens to be right, it's randomly right, which is not going to help you in the long run. Okay, so that's pretty much like the Bitcoin situation. Again, to sum this up, you are looking for a more complex reversal. Common mistake is people get in too early on a single reversal, and this thing can still fail, right? We want to make sure that this bearish momentum is no longer in play. And okay, so far this is it's trying. It's a good sign, right? You definitely want to see something green, and you want to see the support hold up, right? You want to see 40K still intact. We have that. But this requires smaller time frame strategies. The swing trade requires more patience and more waiting. Okay. Now, let me just read some of these chats here. BF, hey, from Slovenia. Okay, cool. Good to see you. Cool. Oh, hey, Tony. Good to see you. All right. How can we detect the false breakout? All right, that's a good question. Hey, Milad. Super. Yeah, I know. It stinks, right? Yeah, I know. This weather. I'm like 15 minutes away from this guy. Anyway. Okay, so I hope this is a good question. How would ETF OTC trades show on the chart? Issuers seem to buy. How can we spot? You can't. You can't. That's one of the. That's a good question, BF. You can't really see that. You're going to have to probably find that data somewhere else. Charts, if you think about it, in a lot of ways, we are blind. We can't see a lot of things that happen. All we're seeing is history, price history. And volume is a very important component, right? Or settlements, or whatever. There are many important components that can help us have more conviction. We cannot see them on the charts. I mean, I could put a volume histogram on here, and that's useless too. So it's very hard to trade with just price. It's hard to have conviction in a lot of situations. And that's why you have to, a lot of the time, to do anything, you have to work on smaller time frames and have very low expectations because of the random nature. Okay. I mean, that's one of the problems I'm trying to solve for the trade scanner, where I'm trying to figure out how to incorporate volume to help filter out some of these trades, because I think, if there's a pattern there where low volumes, a lot of bad trades, good volume, good trend environments, a lot of good trades. So I think there's something to that, and I'm trying to find, a way we can measure that consistently so that we can filter out. Because the whole thing about a system, look, you could put any system together. You could put a moving average crossover system together, but it's not going to make money, right? Because there's really no advantage. So one of the advantages that I'm trying to build in to the bot that I have is filtering, right? Filtering out the bad trades so that only more good trades show. That's, instead of trying to find like the perfect setup that's going to work every time, I'd rather just find the ones that don't work and filter those out so that we have a better chance of, when a signal comes out, it's a higher probability, right? So that's how I'm looking at it. I'm trying to play more of a defensive game. All right. So let me just read some of these chats here on YouTube. Okay. It's been a while. Have you? Okay. Oh, you got through SCMT level 1. Cool. All right. Congratulations on that, Gray. Yeah, it's the level 1 and level 2 aren't too bad. It's quite some time since I've taken those. Level 3 is the hard one, because you have to, I don't know if it's changed, but back when I had to take the test, level 3, you had to actually write out all the answers, and you had to actually explain yourself, and they actually manually have to correct those. So that's like a key one. But anyway, cool. Congratulations. Okay, what is that? The halving has been consistent, right? But okay, but it doesn't mean it's going to continue to be consistent, right? Just because it's consistent for 4 years doesn't really mean a whole lot. Maybe we get the same type of behavior, but something new can come along and change things. So that's why I don't go by stuff like that. It's not very reliable, okay? And then people get all caught up in that, and then everyone's wrong. So it is not rational to do this in winter. But I would like to ask: should you wear our all right, we got a comic over here. Hey, Peter, good to see you. Okay, hey, Eduardo's from Lithuania. Okay, so I saw a question earlier. So we got Stian's question. I got Tillin over here. Hey, Tillin. Here's a quick question about inflation. This is important. Inflation in the U.S. is coming in hot, right? ZN1 is sort of, okay. How long will the market be able to carry this burden of high rates? All right, this is an interesting question. Let's just take a look at that real quick, because that can affect other markets, particularly Bitcoin. So let's go to ZN1 real quick. Now you're saying that interest rates are higher, right? Let's go to the weekly. But this right here is a reflection of bond prices, right? Interest rates are inverse to this. So rates have actually improved over the recent few months. So as you know, during this time, which is basically the Santa rally from what is that, October, right? Week 4 of October to where we are now. This is an improvement. Rates have actually gone lower. We are much lower than where we were at the peak. The peak of interest rates was obviously in October, and we've come off that dramatically. So what burden? There's no burden on the market. You know, the market's gotten easier for the market because rates are, you know, money is a little cheaper. Now, here's the thing though. So when we look at the bigger picture on the bonds, here's a monthly. This trend is clearly bearish so far, right? So we have a couple of months of some green. Okay, great. But as you can see, the bond prices, which is inverse to the yields, bond prices refuse to take out any important resistance levels. We have yet to take one out. The first one is here, which is what? 116.30 or whatever that is. That 116 level. So as long as bond prices stay below that, you know, rates, maybe they improve somewhat more, but there's no evidence that, you know, rates are now favorable yet. So to answer your question, the market, it's actually gotten easier for the market. So that's not really a burden. There's no burden yet. The burden will come if bond prices test these lows and make a lower low. That will be a burden. So I wouldn't worry about that right now. Bonds don't seem to be a problem right now. Okay, although they may return, we have to see if the trend reasserts itself. On the short term, this is the daily chart, you know, we have this higher low over here. And if this consolidates and starts breaking higher, then that only means less burden, right? Which this actually promotes inflation and creates more inflation. So it puts the Federal Reserve in a tough spot. Part of this inflation, too, has to do with fiscal policy, which is, I have a hard time with that. I have a hard time grasping that, you know, looking at the two. I always believed, you know, again, I don't know everything, but I always believed that the Federal Reserve was pretty much in control, but they're not, okay? The administration also has some say on money. And that's fiscal policy, right? So, and you know, this administration, they like to spend like there's, you know, like money is made of toilet paper. So that's why we've seen inflation is, even though rates have risen, we're not seeing much of an improvement. I mean, I see it when I go to the grocery store. Prices are ridiculous. They're still ridiculous. And prices of other things have gone higher. So it's like, man, what's going on with this situation here? So I understand inflation is running hot, but I don't know, you know, what's going to happen here. You know, it's hard to say. It just seems that if inflation continues this way, something has to change at some point, right? The Federal Reserve, they're stuck. It sounds like he has to pause or he's going to have to start cutting, which is going to bring in more inflation. So that's the way it looks. I don't know. I mean, everything in the world today is fake. It seems like this happens this way, that happens that way, and nothing ever really happens. So I don't, you know, until we see the results, I don't know what to make of it. Okay. It doesn't look promising. It doesn't look like an improvement in terms of inflation. That's for sure. Okay. But I wouldn't say that this is a burden as far as if you're talking about rates rising, that typically would be a burden on the market. And rates are not rising right now. Okay, if that makes sense. Okay, so that was real quick on rates. Now, I hope I answered your question. Okay, cool. What do you think of the ETF for Bitcoin? I think it's a lot of hype. Okay, I mean, yeah, sure, it's good. I guess in some ways it's supposed to bring in volume, but it's hype. That's why Bitcoin went to 50K and turned right around, right? Because everyone buys into that nonsense. I tell people, stay away from that internet's nonsense. Stay away from it. It's everywhere, and it convinces people, and then you get caught at the top. Okay, so I don't really believe that it has, you know, I believe any positivity that will bring, I believe is priced in. So that's how I treat that. Information like that doesn't affect my decision making. I look at the two primary things that affect my decision making are trend and levels. That's it. That is it. I look at those two components, and that helps me. I don't look at anything else. I don't care about news. I don't care what the experts are saying. I don't care about any of that other nonsense. It's either trend and levels. And if trend and levels change, then I change. Otherwise, I stay the same. Okay, so that's how I'm able to listen to the market and not nonsense, which comes from people usually. All right, so I answered Tillen's question. Now let me get to Stian over here, because Stian has he mentioned something here. His question is this: any ideas on Solana from the trade scanner? It's in profit. Okay, should we hold or sell? Well, let's take a quick look at it. All right, so here's the trade. He shares the trade idea. That's the trade. And what this came out when? Is there a date on there? I don't see the date. Okay. Well, anyway, let's pull up the coin. So this is Solana, which pretty much has followed Bitcoin in a lot of ways. Now look at this. It's interesting. Nice general trend. I just talked about trend and levels. Okay, so just judging this, let's go to a 4-hour chart, because that's typically with the trade scanner. That's the main time frame that it makes decisions on. This entire area is a consolidation. It's a higher low consolidation. That's bullish. Let's put the trade on the chart. So entry price 92.50. Okay, that 92.50 is right here. When was the date on that, Stian? Was that like, when was that? Okay, those, it's on ETF or ETH. I don't understand what that is. I would also thought the ETF would have caught interest of people, investors. Yeah, it has, but it's priced in, right? The party's over on that. It has caught. I mean, that's what the hype has been for like since December. All this ETF drama, they're caught. So I think it's buy the rumor, sell the news, right? All the morons that buy now are basically, you're buying, you're buying you're taking up all the people that got in early. You're letting them out at a profit, and you're taking all the risk. Okay. Oh, so 113. Okay, so that trade came out on the 13th. Okay, so that's here. All right, so I got this right. So that was where the trade scanner called this trade. All right, not bad. Higher low situation, pin bar, right? Support area. That all makes sense. The context of the trade makes sense. Now, what are the stop and take profit? 84.35. Let's see, 84.35. That's over here, 84.35, somewhere around there. And the take profit is 104.72. Wow, this thing hasn't gotten 104.72 is up here. So this thing should have gotten taken out. I guess it missed it by a few ticks or something. 104.72. I mean, it touched on here, but maybe maybe whatever. Sometimes it depends on the exchange and the timestamp. So okay, so let's say you're still in the trade. What do you do now? Right? It's still in the green. It still has some green. Well, here you have two choices. You have a double bottom here. You could try to give it a chance, but if anything, when you have a trade, even at this point, right, it's still in. But let's say it gets to 1-to-1, you should move your stop. The stop should be moved to break even. Okay. So if the trade turns red, you don't lose anything. You should always do that at 1-to-1, and you're going to get stopped out. There are going to be times when you get tapped out, but those tap outs, break even or break even plus your cost, break even plus 1. When that happens, you don't lose anything. And that's the key thing. People get upset because you give back profit. I understand, but you're not actually losing any capital in your account. You're breaking even, and you make your cost back, right? That's what you should probably do in this situation. Now, does it continue? It's going to be tough, because we just saw Bitcoin is trying to turn around. This thing is following Bitcoin, clearly, right? Bitcoin reversed hard, and this thing reversed hard also. So in these situations, understand, I know you, Stian, you understand, but other people, Bitcoin is king, just like the S&P is king, right? And the bonds are king. They move first, and then your stock or your coin follows. So in this case, right, this is not a leader, this is a follower. And if Bitcoin breaks 40K, this thing is going to break even if you put your stop to break even. This game is about mitigating risk. And if you have some green, you should mitigate risk. All right. There's going to be times when this happens. All right. 5 a.m. Okay. So yeah, Steen, I don't understand why this trade has not reported a take profit, but okay, whatever. Like I said, maybe there's a number mispricing at the or it depends on the exchange, right? That it's being factored on, right? I mean, this is coming from Coinbase, so obviously maybe another exchange, the trade is still open. All right, so again, no problem. But even at that point, even if it got to that point and it got close to the take profit, you're at that point, you're greater than 1-to-1 reward risk. Okay, you should move your stop to break even, and then just let the market play out, because there's no way to know. You have to understand, a lot of these trades are random. The outcome is going to be random. It's going to be 50-50 a lot of the time. And the way to make money with a 50-50 system is you have to make more money when you win compared to when you lose. Okay, and you have to also make up for your cost. So ways to improve a 50-50 system. Let's say you're using a moving average crossover and it's a 50-50 system, right? You have to win more than when you lose, and you have to be breaking even when you have the opportunity to, because you want to get rid of, there's a lot of trades that are going to go from green, they're going to turn red, and they're going to stop out. Those trades that go from green to red, those could be, you can avoid those trades by breaking even, right? And it's nice to have a robot do it for you so that you don't have the emotional pain of, I gave back this profit, because it hurts, right? Emotionally, there's just no way around that. It's annoying, if anything. But if the robot does it, who cares, right? You don't have to sit there and babysit it and whatever. The robot does the work, and you're like, all right, whatever. Okay, you don't miss the money because you never even saw it. Okay, does that make sense? So that's why automation is such an important thing. Okay, it only went to 103.9 on my info, 102.89. Okay. So Coinbase, maybe that Coinbase price is a bad tick, or maybe that's, the Coinbase price, and so that's why you guys are still in the trade. That happens because all these exchanges aren't exactly at the same price, right? That happens. So, again, this is where the bot automation, right? When the bot can take trades on your behalf and the bot can move the stop to break even, all you have to do is check your account every once in a while, make sure the bot isn't going crazy. But we're always monitoring that because we don't want the bot to go crazy either. So that's really all you're going to have to do at some point. That's what we're working toward, because I believe that that's really the solution for a lot of retail traders. Otherwise, trying to figure this game out on your own is I don't think people have the patience, and they don't have the resources, because it's hard. It takes a long time. And why not have, if we have a system that can basically do all this work for you, then you could take your time to learn. There's nothing wrong with learning, but the thing is, if you rush and you force it, you're just going to lose money. You need to be able to take your time. You need to be able to just absorb this casually, and so that, there's no pressure, because when there's pressure, there's emotion, and you're going to get mad when you have a profit and you give it back. And the next trade, it may affect your next trade, because you're going to be like, this time I'm not going to give it back. And that's the big winner, right? You take your small profit and then it runs and you're not in it. Or the thing goes red right away. So I'm getting out of this thing, right? So you get out right away before it goes to the stop. And what does it do? It never goes to the stop, turns around, and would have been a take profit. So that can be very frustrating. And you can go through that cycle, especially when we're going through a consolidating period. If you notice, right, Bitcoin in this section, since what does this go back to here? The beginning of December. Okay. This structure goes back to the beginning of December. You see that? We've basically not really made much progress since then. I mean, our price right now is basically where it was at the beginning of December. That's going to have an adverse effect on things like the bot, because if there's a lot of noise, there's going to be a lot of fake outs, right? And if you notice, right, if you look at the record, you can see the track record. There's a link in the description. A lot of the bad trades were taken in here, in this area, when Bitcoin was fooling around there. I'm talking about the altcoins, right? So there was a lot of indecision, a lot of fake outs. And this area happened to be what? Weeks 3 and 4 of December, which are what? Holiday weeks. What happens during holiday weeks? No volume. And I warned people about that. Okay. By the way, Steen put together this great system for me so that I can now send messages to all the channels in the Discord server. And I've been working with it a little bit because, I just have to get used to a few things, but that's going to allow me to provide more context. Okay. So I haven't been doing that a lot yet, but I'm going to. So you'll be able to see. I put some notes in there, by the way, about this peak. I put a specific note about that in there before it peaked. You could still see it. It's still in the channel. Okay. So anyway, I want you to know that resource is there for you as well. All right. Let me just take a look here on TradingView. October, when the SEC said they are not protesting the case against Grayscale, that is when institutions know ETF will approve, and they bought. Right. Okay. Oh, right. So yeah, you make a good point there, Bite and Block. You make a good point, right? That's when the party started, and now, right, they've made a nice profit since then. And who's left to buy this thing, right? Only retail traders who are ignorant. That's who's going to buy it now, and they're going to get caught. And all you're doing is letting out the early buyers who were on top of all that SEC stuff 3 months ago, right? You're just letting them out for a profit. So, that's not something I'm interested in. So thank you for mentioning that. That's a good observation. Okay. All right. So I think that's pretty much it here. So yeah, I'm just looking through here. Tia. Oh, Tia. All right. Hold on. We'll take a quick look at Tia. Tia is something that our community has been following. Okay. Alex has been all over that since the beginning. Okay. No, it's not. Don't exaggerate, man. You're exaggerating. It's not. This thing's not going anywhere. You follow too much hype. I'm sorry to tell you. The party's over here. Right? Look, it's moving up. It's pushing these highs now. But you should have said that here at the bullish pin bar. All right, not here where it's giving us a bearish pin bar. If Bitcoin breaks that support, this thing is going to just get ugly. Right. Plus, on top of that, how many waves can I count here? 1, 2. This is 3. Okay. This is wave 4. Typical wave 4. And what do we have here? Wave 5. You're going to buy this thing now? I wouldn't go near this thing. Okay. Unless it's a day trade, that's one thing, but you're nuts if you buy this. Okay. Yeah, you shouldn't use that kind of language because it could confuse people that are new. That thing is going nowhere. And especially if Bitcoin breaks. Right. So the whole idea behind that is the potential is limited. I see that all the time with these altcoins, and people still don't listen. So I can't make you see. I can't, if you can't see that for yourself, I can't help you. All right. Anyway, but thanks for mentioning. All right. So cool. Trends and levels. Can you go into detail? Well, Giovanni, trend. All right. So I'm going to answer this, and then we'll wrap this up. Trend is very simple, right? Trend you can identify in many time frames. It's higher lows and higher highs, or lower lows. It's a structure, okay? And markets trend. That's a fact. So you have to be able to be good at identifying trends. There are a number of ways you can do that, right? That's why I have a training program. Levels are support and resistance levels and how they are relevant to the trend in question. Right? But you can't mix up the time frames. So if you're looking at support and resistance levels on the larger time frame, you have to compare them to the larger time frame trend. You can't sit there and look at 5-minute support and resistance levels and say, well, the daily trend is bullish and the support and resistance, like they're irrelevant. Okay, they don't. The magnitude is not the same. So those 5-minute support and resistance levels are going to be very, very unreliable compared to daily support and resistance level. So you have to keep everything the same, right? But those are the only two factors I look at, and they keep me out of a lot of trouble. Okay, I don't catch a lot of big winners. I miss a lot of trades. Yeah, whatever. But I stay out of a lot of trouble. Okay, because I follow the market, and those components allow me to have a passive mindset and follow the market. And I listen to what the market says because I'm never right. The market is always right. That's how I see it. Okay, I get people all the time saying to me things like, "I think." Or I thought the market was going to do this. Why are you thinking? By doing that, you're implying that you know more than the market, and you don't. Okay. I have over 20 years of experience, and one thing I learned in all that time is I definitely don't know anything. That's what I know. That's what I know for sure. All right. And you have to come to that point where you realize, and then that's when your mind is open enough to let the market lead, and it tells you what it's likely to do or not. And then you have to basically manage your risk around that information. Okay. So anyway, all right. So I'll leave you with that. Bitcoin will break back to 618. Yeah, get it. There you go. Right? Opinions, can't have those. Maybe it does, maybe it doesn't. Right? I don't. That's why I don't go by that. I just go by what is the market doing now. Where is my support? Where is my resistance? And what kind of risk am I looking at on the type of trade that I'm interested in taking? Okay. If you don't know the type of trade that you're trying to take, like a day trade or swing trade or an investment, if you don't start with that and you don't have that, you have nothing but problems, right? People are jumping around. You can categorize the trade by risk. If you don't want to take a big risk, right? Let's say it's at resistance, but it's a bullish trend. You want to go short, right? But you're going counter trend, which means probabilities are stacked against you. No matter how you look at it, they're stacked against you. And you will get caught in bad trades as a result of going against the trend, right? But if you go small with a day trade and you're wrong, you lose small because you have a very tight stop. It's a day trade. You don't sit there and take a swing trade and try to catch the top because you will get caught. Trust me, I've done it multiple times. Okay, so you can categorize using the type of trade to categorize your risk, and that then can open up possibilities. It depends on how aggressive or conservative you are, right? Like, for example, I don't short Bitcoin, but if I was going to short Bitcoin, I certainly wouldn't be looking to short it here, sitting on a support level. If I was going to do it, I would be looking at resistance levels. But it's like I said, since this trend is clearly bullish, hasn't changed yet, I understand that counter trend trades are stacked against me more. I'm more likely to be wrong. So I need to take less risk. I need to control that risk. So I would take a day trade if I was going to do that, right? Not a swing trade. So, and just to kind of clue you in on the trade scanner never takes counter trend trades. It only takes trades on the side of the trend, and it still gets a lot of them wrong, right? Because of the noise. But it's programmed to only take trend following trades, no counter trend. If there were counter trend trades in there, man, there'd be red trades all over the place. I mean, they'd be like double the red trades you see now, but it doesn't take those, okay? Because it does not have those instructions. Anyway, all right. Okay, people, I've been talking too long because I talk too much. So do me a favor, press the like button, press the subscribe button, leave a comment in the chat, in the comments once the video is over, because that helps out as well. The algorithm needs to see that. And go for a free trial on the trade scanner. You'll get all the trades by email. Now, again, do me a favor also. If you do the free trial and you cancel it, which is cool, give me feedback. Tell me, why doesn't this work for you? You know, and because that helps us shape this thing so that we could build a product that does provide value and that does help you. Because that's the whole thing. I'm not like one of these frauds that's just trying to rip people off and take your money and not give value. Right? I want to give you something that's a valuable tool, and I also want to provide valuable insight so that you can navigate these markets better, and most importantly, learn how to control risk. Right? The things that I say are very unpopular because I don't come out telling people that you're going to make $50,000 every day like so many other people do. Right? And they have these exaggerated claims and all this other nonsense. Sure, that sells. That sells product because it sells a dream. You have to realize, right? This market is not about dreams. If you actually want to make money, you have to be realistic. Now, if you want to buy dreams, there's plenty of people selling them and they feel good, but you're not going to make money. So you have to decide what's more important to you. Dreams are actually protecting your capital and growing it realistically. Only you can make that decision. I can't make that decision for you. All right. Okay, cool. So guys, again, check out if you want to send me a message or something, go to there's a Discord community you have. It's free. So you could go there. There's a free area. There's a lot of activity in the community chat. We're going to be bringing more stuff over there soon. So check that out. There's a link there. And like I said, check out the free trial. Try it out for a week or whatever. And if you don't like it, cancel. But please tell me how I can improve the product. All right. Anyway, so thank you for watching, everyone. I'm going to let you guys go. Enjoy the rest of your day, the rest of your evening, wherever you are in the world. And thank you again very much for watching.